Good morning, good morning. Hey, Johnny, how are you? What's up, Adam? Todo tranquilo, todo tranquilo. Hey, Sean, how are you doing? Gotta love Port Jeff. Ah, I really miss my crew in Long Island. It's nice that I have Steve as a partner in the trading room because he's from Port Jeff. I miss doing deals out of Port Jeff and Miller Place. Good times. Hey, Gold Coast. Good morning, Lonigan. Where's Kevin? Usually around. Oh yeah. How is that blackout? What the hell happened there, DJ Trader? So you didn't have power for 10 hours in Spain? Amazing. Hey Dan, Adam G, VS Squad. Whole crew's here this morning. Hey Shanghai, how are you? Long time no see. Well, hey Howard, how are you? Yeah, I remember when power outages were such a huge deal when I was, working. And now if the power goes out, I'm like, huh, it's like no internet. Just chill out, read a book. Hey, Tersey, what's going on? Raj, how are you, brother? With earnings season, how can a trader safely hedge a portfolio against market volatility? That's a great question. Unfortunately, I am not a portfolio manager and I do not hold stock as a long term investment. So, the only recommendation really I have, well, not a recommendation. The question I have to ask you, Adam, is what is your time frame? So, if you have a portfolio and it's a retirement portfolio, then really doesn't matter, right? Yeah, I would just say just leave it alone, don't look at it, and don't try and do anything during the volatile times. I think that's where a lot of people screw up is they try and sort of grab the reins during that volatility. And that's tough. That's really, really hard. Uh, yeah, I am not a portfolio manager. I am not a financial planner. I am what they call a liquidator. And the sooner you give me stock, I'm selling it. Right? Well, that's the thing for penny stock. It's okay to invest. Now, don't get me wrong. Here, I better do a little disclaimer here. When I say I don't buy stock, right, I'm not trying to get you guys from holding equities. Everybody does that in their 401k and things like that. But that comes to penny stock, right? Don't buy penny stock because they'll give it to you for free. So let's get into our class. Or class, what am I talking about? Sorry, I've been moving for the last couple of days, so brain's a little rusty. So our overnight inventory is quite long. It's at least 70 to 80% long. How do I know it's 70 to 80%? Because of the blue stuff. The blue stuff is calculated at 70%. And a little bit here, a little bit here. I'd say it's probably about 80% long. Right? What does that mean? It means that it should correct down. Now, it's already started correcting. But if you notice, right at 55.52, for the last 1, 2, 3, 4 half-hour sessions, there have been buyers here. Now, why would that be? Well, let's go take a look at yesterday's action. Now, somebody was asking about the V. If you look at the previous day, you can kind of figure out where the bids are going to be the next day or during the night. We had a big liquidation down. This is all just inventory. And this is what people really don't understand. And what I really want to show people is you will have liquidations. The liquidations seem a lot more serious or severe because the range, you go from like 55.80 all the way down to 54.92. That's a big liquidation. So what happens is a lot of people will get short under this 55.20 area. And when the market rallied in the afternoon, there's a ton of people short under 55.20, and there's a ton of people short right here in that last hour of trade, and they're all bidding the market here. That creates the overnight low. And then subsequently, people short it during the overnight session, and that creates support at higher levels. That's why the market will not kind of break that 52 so far. So we've corrected overnight inventory. We haven't taken out 52, and we're kind of bouncing a little higher. So how do we trade this? We're inside yesterday's range. We're inside yesterday's value area, which is cost basis, right? The blue stuff. So you could expect this kind of trading in cost basis. So now you know what to expect. A break of yesterday's high or low is change. Until then, it's business as usual, so that means back and forth. That's why we go to the 1 minute chart, and I did my balance zones this morning. I've got 55, 53 to 59. Double it to 71 to the upside. The discount zone, you double it to 41. Okay? And now we just hunt some trades. So there was a nice trade here. I was making coffee and I missed this one. That was a nice look below and fail of 53. Up to 6 and up to 9. Now if we get accepted over 59, we know that there are sellers here. So if you are long, be prepared, right? So say you're long off of VWAP, or say you're long off of down here. As you clear 59, when you come up to this 60.5 level, that's where they engaged before that took the market underneath all the way down to 53. So those are where the sellers were competing. You can probably bet that they will be there again. Why is that? Because if you were a seller here before, why wouldn't you sell at that level again? Now, we're not talking people with 1 or 2 contracts. We're talking people with size, right? Because size, there it is right there. There you go. Right? There you go. We told you the seller would be there. The seller's there. Now let's see how aggressive they are. To the tick. And this is something that everybody has access to. There is nothing at all esoteric about this. There's no special software. All you have to do is pay attention. Right? Pay a little attention. Because if I was long at 57, for example, or 58, and I know that there's a seller at 60 and a half, I'm going to sell at 60. So I can get out of the trade and make some money and book some profits before somebody else comes and takes my customer. Now, if you want to hold a runner, I would put my next sell order here, underneath 62, right? So that's what, 61 and 3/4? I'd go 61 half. Always try and undercut where you know the sellers are going to be. That way you'll actually get paid. Does that make sense? Now the sellers, the ones who have bought inventory, who are long underneath VWAP, who are long underneath 59, if they have to compete, they'll put it on sale and the price will come under 59. If they don't have to compete, right? Think of here. This is good. Think of the bid as a glass door, and if the people who are selling, if they raise price the way they're doing now, they see buyers, so they're raising price. Let's see if we can get a print there. No print, so they come back down. Raise, no print. Right? Nobody's willing to buy it at that price. It's offered there, but nobody's taking the offer, so there's no print. That tells you information. See, now the bid moves down. Let's see what the offer does. The offer comes down. Right? You need to capture the buyers. And if you have 500 contracts for sale, you don't care about a tick. Right? So you will go up and down, and now this is all done electronically, so it's massively efficient. And see, oh, there we got we finally got someone to buy it at 60/4. See? Whoop. Brought some buyers in. Right? That little price stability brought in buyers. So the next level will be 61 and 3/4. Exactly. Right? If there's buyers, there's no need to lower price. Because when you lowered price, that brought the buyers in like a little sale. So it got people lining up. It's just real simple, right, Johnny? The hard thing is the execution of the trade. Once we understand it, our goal is to take analysis and trade prep and simplify it. And the simplest trade prep is, where's the bid? Where are they selling? Where do they stop selling? Where's inventory? Is it above us or below us? That's all we need to know right now. Any poor lows, poor highs, those kinds of things. Right? Then we can focus on execution. Trading is 90% business and another 90% discipline. See, if you understood why you need to be patient, it helps. People hate being told to be patient, Adam. I know, because I've been using the word patience for years. And everybody completely, as soon as you tell someone to be patient, they do the exact opposite. So what I do is I tell them, be smart. You don't want to be stupid. And they're like, no, I don't want to be stupid. So be smart, right? Be smart. Wait for the money to fall out of the people's pockets, and then you go pick it up. Right? Be smart about it. And I think that hits home a little bit because if you understand why you have to be patient, then you'll be smart. Because if you just keep telling people, oh yeah, patience, patience, people hate being told to be patient. They can't stand it. And they will always do the opposite. I have people, I'm like, don't trade today. JJ, the end of the day, JJ, I blew up my account. Happens every time, right? I'm like, be careful today. It's a volatile day. Don't do this. Don't do that. Not hours later, they're messaging me, I blew up my account. Also, and here's something that people don't like to hear. Trading is about the ability to follow simple instructions. If you can't follow simple instructions, you'll maybe last a day on a trade desk before they fire you. If they tell you to do something and you don't do it, you're fired. Right? But when you trade for yourself, you know, there's no consequences. Oh yeah. Usually it's twice. They don't even get three chances. If I tell you to do something once and you do the opposite, or you don't do what I'm told, that's your one chance. The second time you do that, you're gone. You're gone. You're fired. Because if people can't follow instructions, they put your firm at risk. And the last thing you want are hard-headed, uneducated people. Yeah, trial by fire is great with somebody else's money, Johnny, not with the brokerage firm's money. Any real life examples of this? Yeah, definitely. I've fired lots of people. They just don't do what they're told. It's pretty simple. It's a very unforgiving business. Because any one idiot can, within seconds, lose millions of dollars if they don't follow instructions. Right? Okay, we've got sellers at 61 and a quarter. You cannot have people who don't listen on a trade desk, especially if they don't know what they're doing. That is like, you might as well just throw grenades inside the building. You're just asking for trouble. So if people can't, yeah, it's really bad for business, right? And if they're like, oh, I got tilted, well, I'm like, go tilt somewhere else, you know, not on my desk. Yeah, there's no sense of urgency when you're trading by yourself. There's absolutely no sense of urgency. Two tick range, pretty untradeable here, right, Dave? A little bit of distribution. Another slow night in Walmart. Right? This is wholesale business. Wholesale owns supply under 56. They're selling it between 59 and 60. There's really no trade for me right now. Yeah, what he should have done is when he took the account from 1,000 to 6,000, he should have taken 5,000 out of the account and got it out of the hands of his ego. It was never his money to begin with. It's only a matter of time. Creeping under 59. Let's see where the bids are. And trading is a difficult business, and retail trading is not for everybody, right? It's not for everybody, right? You have to be insanely disciplined to be a retail trader. You can't do this off the cuff. I've tried, it doesn't work, right? You know, I've tried, it doesn't work. You can't be sloppy about it. You have to be prepared. You have to take only the trades that make sense. Right now, there's no business for me to take a trade. We're between 59 and VWAP, right? There's got to be a business reason to take a trade. There's got to be a business reason to stay in a trade. If those business reasons disappear, you need to disappear too, and your capital needs to go with you before it's all gone. Now, when I say things like that, people don't quite understand it. So the business reason, for example, right now, if you were short under 60, like maybe, right, where you saw the sellers here and you were shorting into this, right? And it did a look below and now it's failing 59 because you know there are bids coming in at VWAP that are holding this thing up. You'd have to cover, right? Take your profit, right? If you're waiting for this, you have to wait till we take out the bottom of this candle. And if we can't, then the market's going to rotate back up. So for a professional, they'll sit and watch this for a while, right? I just started with you guys 20 minutes ago, got my first cup of coffee, drew my balance zones. Now it's time for me to sit and observe. Now, a lot of people will go, JJ, it's 3 in the morning in New York, and I woke up for this. I got to take a trade. I'm like, be my guest. It might not be a profitable trade, right? And then you all have those people like, I get up 2 hours before I go to work, and I have to take a trade before work. Well, be my guest. But if the business reason for your trade's not there, you might as well just go back to sleep or go to the gym. Because I would rather not lose money than force trades and lose money. Just to have a feeling like I've done something. There, what did you do? I did something. I lost some money. Good for you. Right? You've been productive. Right? You have to know when it's time to do business. They are the worst trades. You're like, I've got 2 hours to do a trade. Okay, I'm in one. It's not doing anything. It's not doing anything. It's not doing anything. Right? Yeah, rotation is just the rotation of inventory, Luke. So we have inventory here, right? And we're selling it here. We just put it on sale to see if any buyers come in. If they don't, we're going to come right back here. And this price action is so slow, it doesn't really merit you. You have to go listen, right? If you have to go listen, I'm in business and I only transact when it's like this. These are the conditions that I need to put money at risk. I want to look below and fail. I need a certain kind of price action. That's when I do business, right? When it does this. When it does this, I buy a little here at 54, put my stop at 53, sell some at 56. If we get over 56, I'm out at 58. That's my trade. If that trade's not there, I have no business trading. I'm not going to try and force this. No. Take that word imbalance, Terzi, and throw it away. Okay? Get rid of that word imbalance. I don't even know what it means. Right? What that means is there was no order that executed at that level. That's all that means. There's no imbalance there. It's not like a guy walking around with who's falling over. Right? All that means is there was no executed trade at that price. Right? That word imbalance makes me think of somebody who's not stable. Right? It has no place in trading. It's just BS. Right? Just focus on where the sellers are engaging. Right? The sellers are engaging at lower and lower prices. Why? Because they have to compete to get the buyers. That pushes price lower. Very simple. Right? A lot of these trading rooms and things like that will make up stuff so they sound smart. Good for them. If I was short now, I'd probably be covering at VWAP. Right? Just try and keep it simple. The more garbage you have banging around in your head, the harder your execution is going to be. Right? Today is month end. Right? Tomorrow is the last trading day of the month. Hopefully it's a nice slow month end. I'm not going to be trading today because as soon as I'm off screen with you guys, I am back to packing and moving. Travis, what's up? Simplicity is the key. There's no reason to think about Pythagorean theorem when you're in a street fight. It's really not going to help you. How you doing, Travis? Up at midnight? Oh, I'm sorry you can't sleep. Where do the analogies come from? Real life. It's called life, Adam. What you want to do in trading is you want to train yourself how to react. So when you see your setup, you react. When your setup starts going bad, react, right? And train yourself not to react when you don't see your setup, right? When the type of business that you do is not present, there is no reason for you to be in a trade. I'm not sure what you mean when you say you're hedging your position. I never say I'm hedging my position. So I wouldn't worry about it, DJ Trader, right? What you want to focus on, DJ Trader, is your trading setup, which is your business plan to do business, right? Under what circumstances do you do business? Don't worry about all this hedging and imbalances and unfinished business and all that BS. Just worry about how am I going to make some money, right? Is there too much supply? Is there a lack of supply? Right? How do I build my setup? Right? How do I build my business plan? So when the market does this, I do this, and then this is where I put my risk. Do you understand what I'm saying? Don't waste a lot of time on trying to understand what's going on and what other people are saying. Right? This is a business where there's a lot of people who talk a lot of poop, but they're not going to help you make money. Right? So always try and stay on focus. Right? So I like situations where you have a fixed reference, like a number here, right? And the market looks below it. The sell orders are done. The market comes back up. You buy a little bit. You got a place to put your risk. Right? When you execute a trade, your out is there. Right? So there's your insurance. Right? You go into a business transaction. Your insurance is here. Your target is here. Your first target. Right? The reason for the trade is there's no supply. So you grab some supply and you insure your supply. Put your supply for sale. When it sells, you have a profit. There's the business reason for the trade. Does that make sense? You'll never hear me talk about hedging. I don't use that word. Yeah, your stop is your insurance on your account. So say you buy 1,000 TVs from China, Luke. Wouldn't you insure it just in case the container ship gets lost at sea? That's what your stop is. It's very simple. The reason for that trade is predicated on the fact that no one needs to sell under 53, so I'm buying 54. Now, if somebody sells at 53, 52 and 3/4, now I know that I've bought product that is mispriced. I've paid too much for a product and it's on sale. So I'm going to get rid of it quickly before the market goes to 50. Let's watch 53 now as we come down. Well, the market is geared to go long, especially in an uptrend, right? Shorting is good too, but they changed shorting in 2005, right? They changed the rules for shorting equities in 2005, which drastically changed how shorting works, right? I am of the opinion that you should learn how to go long because it'll make you a better shorter. Any reason for the change? Politics. What's up, Mike? You see, since the dawn of time, insiders who sell stock have always blamed short sellers for depressing the price of the stock, which sucks the public into buying the stock to fight the shorts, when it's actually the insiders that are backdooring the stock into the public buying. Look at us, we're being abused by short sellers. Get in there and buy a couple of 100,000 shares and support us. Meanwhile, they're on the sell side. How do I know? Because I've been the guy who sells the stock for them. Hello? So in 2005, they introduced Regulation SHO. Always, Johnny. But they've been doing this for hundreds of years, and the public still falls for it. And they blame the short sellers for all this bad stuff. Now, that was not a look below and fail. That was a fail to take out 53. And had I been not flapping my gums, that might have been a good trade. Buying 54, stop under those candles, rotation back up. And there's a seller before 59. So that's a rotation, right? We just did a rotation. We rotated down, and then we rotated back up. And that's within balance. Yeah, look at the banning short selling. Look at the countries that have banned short selling. Yeah, you don't have time to do a locate. You have to have a reasonable assurance that you can get a locate. There's the thing, though. If you take the short sellers out of the market, guess what? When it falls apart, you're taking away the first buyers. Okay, back above 59 again. We know there's a seller right there at 59 and a half. Right there, right there. Can we get a 59 and a half print? There we go, all the way back up to 60. Right where those sellers were again. Here. Yeah, there's different ways of doing it. So a little dip under VWAP and back up. It seems to have cleared out this overhang. Let's see if we can get above 62. Because if we have the juice, we'll take out these upper stops at 62. Yeah, inventory is long, and the corrections have not been very meaningful, right, Travis? Because we haven't been able to get down to the close in a while. Let's see. There we go. See, we had enough juice to run the stops. I don't even know what that means, Adam. Sounds like a bunch of gibberish to me. You know, unicorns are not a real creature, right? I know that term is tossed a lot around a lot in finance, but you guys realize that's not like a real. Sorry. Okay, back to work. Back to work. Sorry, I'm a little punchy from all this packing. Oh, good grief. Trading inside settlement is a good thing. Is a good thing. No drama. Now, you guys in the room, I don't want to hear from any of you that you've blown up your accounts today and tomorrow, okay? One of these days we'll see the ghost of J.P. Morgan riding a unicorn past the New York Stock Exchange. Then we'll know it's end of times. All right, remember, today's the day, tomorrow is the day where you keep the money you made this month. Which means, as Red Foreman from the 70s show would say, don't be a dumbass. And now we're creeping up to that 55.64 level. So one thing I don't do, just talking about the business a little bit, if I'm at all distracted or if I'm stressed out, I don't trade. Because I make bad decisions when I'm distracted and stressed out. And that's simple, right? If you haven't made money this month, don't try and push it and do it in the last 2 days of the month. That's how they get you, okay? We have a new month starting. Just relax. Got a lot of earnings stuff happening, right? We've got Apple and Microsoft and Amazon. All of those companies are reporting earnings this week. Just chill out. It's a good time to learn. It's a good time to work on your setups. And let's see, 64, 64 works. Now, if the market has quite a few people short, it will get up over 64 and get up to that 65. There's a standard deviation up there. Seller at 64. Yeah, hopefully it'll be a nice, calm month end. It's been a crazy month. For month end, I'm looking to see if we can get up my longer term levels. If this, because nobody's really selling into this month end because the market's up. So here are the levels you should look for. So there's that 55.64 that we just hit right there. So 64, 55.84, 56.01, and then the top of this zone is 56.23. Those are the upper levels. On the lower side, the close of yesterday, right? The overnight low, and then down here at 55.20 and change, and then the low of yesterday. Those are basically what you're looking at for the night session. It's tradable. Hey, John, it's month end, John. Month end. Another month dead and gone forever. And what a month it's been. We had a month that had a 500-point range in one day. Historical stuff. I don't know, Mike. What are you doing, Mike? You're in the room. You're over here. All over the place. Finding some bids at 62. Let's see if we can pop it over 64. And then your target would be 55.67 and a half. How's life with you, John? How's the teaching pilots going these days? Do I look at 4-hour time frames? Not right now. No. Look, I'm what they call a grinder. So I like to make my money and get out. I like to know where not to short and where not to go long. That's really all I care about. Because I want to make 3 to 5 points on 3 to 5 contracts. Do that trade maybe 2 or 3 times a day, and then just go about my business. Go do something else. Now, if you were working like at a place like SMB Capital or you're a prop trader or something like that, then you have different goals, right? And of course, you're going to look at longer time frames. But what I basically do is, and if you want to, like, if you come by the trading syndicate, we have a room where if you want to level up your trading, that exists and use those prop accounts like Apex and those sorts of things. But I like to include everyone, right? Most people that do this just want some extra income. Not everybody wants to be a prop trader. Not everybody wants to do this for a living. They have a nice job, they have a family, they want to earn some extra income. And I teach them the skills to do that where they don't lose a lot of money, right? Now, if you want to level it up, if you want to go further, I've actually helped people get on trading desks in Wall Street by teaching them the business. So we do have that available, right? So we cater to everybody, right? I do not use prop accounts. I trade for some old clients and friends. Yeah, if you're in Jersey, just start networking. In the old days, you just go hang around Montgomery Street and get on with a market making firm. But now you got to have a math degree and all that stuff. I'm a big believer in those prop accounts, Jerry, because I think people should use them to get discipline, right? It helps you take a disciplined approach to trading. So you're not just. Now, the other thing, though, is people just take those accounts and they use them like a video game and they just keep blowing them up. I mean, you can do that if you're the kind of a personality that just likes a thrill, then definitely use those accounts, right? Right. Because we want, if you're going to be a cowboy, do it with somebody else's money and pay the 30 or 40 bucks a month. Oh, good stuff, Jerry. You just passed the evaluation. Nice work. Well done, Jerry. All right, we're heading for those 67 stops. Let's see if we can tag them. If you're long, you should be okay until around 67, 67 and a quarter. And the top of this range is 71. Nice little short squeeze in Globex. Yeah, just be cautious during month end with those prop accounts. If you're allowed to just lay low, do that. Ride it out. Hopefully it's a nice calm month end. Just stick to the plan. Okay. So a little plug for the room. Traders, real quick before we leave you. Don't trade alone. We built you a decent trading room at the Trading Syndicate. We do live sessions. I do a lot of education in there as well, which is more than what we do on YouTube. Help you track your process, and we give you access to serious traders, and there's no BS. You know, we give you practical information that you can use to make money, right? And if you want to level up, we're partnered with Apex, Tradeify, Take Profit. Pass the evaluation, you get to trade their capital. Use our links in the description. It supports the stream and gets you in the door with real upside. Now back to it. Yeah. You know, guys, all you got to do is improve one habit just slightly every day. You don't have to change everything right away. It's hard to do that. You know, just slowly make changes, and you'll see that over time, it'll work. I don't know, John. But that's not retail trading. That's working at a prop firm. So they have their own methods. They have their own way of doing business. Every fund, prop firm, they all have different ways of doing business. Right? You don't work at SMB. So you should not. What you need to do is focus on the process that we teach and just stick to it. Just put on some blinders. Everybody has different ways of teaching this business, and that's great. You need to find something that works for you, and I always like simplicity. Right? Well, Raj, your risk profile is pretty simple, right? And it's a good thing you brought that up. Let's talk about risk. People always say, what's your risk tolerance? It's kind of misleading because a lot of traders have a huge risk tolerance, but they got no dough. So it's no good having a $50,000 risk tolerance. Well, I can lose 50 grand. How much money are you trading? 2,500 bucks? Your risk tolerance has to be realistic, right? If you got 5 grand in your account, you might have really high risk tolerance, but that's stupid, right? It's what's your risk ability, right? What is your risk ability, right? You shouldn't be thinking I can lose 50 grand on this trade if you only have 5 grand in your account. That's what people get into trouble with, right? Yeah, I mean all of this probabilities and 2R, 3R, that's all great. But for retail traders, John, How about we make it simple? Like, don't do anything crazy. Just because even if you have $100,000 in your account and you've never traded, doesn't mean that you should lose $100,000. Know what I mean? Just got a little common sense, people. If I can leave you with one thing before I depart this earth, is that you please just use some common sense. Remember back in the day they'd say if the stove is hot, don't touch it? Just simple stuff like that, okay? We took out that 57 stop, looking for 71. Let's see if we could get up to 71, right? You know, it's risk capability, right? Do I have the capability to take on this kind of risk? And what is the reason I'm taking? What is the opportunity, right? Okay, I'm going to risk this amount of money, but what's the opportunity? Is the opportunity realistic? Oh, I'm going to make 100 points trading today. I'm going to risk the whole account. How realistic is that? No? Yes? I don't know. I'm just an old guy. Risk. Just be smart about it. Okay? Just be smart about it. Right? Ignore all those people who talk about R's and things like that and go, listen, I don't know what I'm doing. I'll use a funded account. Right? Yeah. It'd be nice if people learned from their mistakes. Unfortunately, in trading, that is kind of hard. People usually don't learn from their mistakes. They keep committing the same mistake over and over and over again. And that's because they don't understand why they're making the mistake and they don't understand the business. And they don't understand the urgency of the business, the severity of the business until their money is gone. Right? What do they say? It's all fun and games until you get poked in the eye with a sharp stick. Right? Just keep it simple, folks. Have a wonderful morning. I will be back at 9 a.m. Eastern Time, which is 2 p.m. UK time. I'm back off to the land of bubble wrap and moving. Thank you, everyone. Have a wonderful morning. Thanks for being with us. Bye for now.